Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, October 3rd, 2022. This was today. The Bulls did. It was just a massive short squeeze, and that's pretty much what I've been saying as far as being careful shorting down at those levels because we had buy signals on all of them. It just the economy and everything else was holding them back, and then today they just unleashed it and they took the tape from start to finish. But you can see right here the 200-day moving average on the weekly chart is at 36.83. We closed 5 points underneath that. So if they get above it, that's where I think that will start heading a little bit higher. And really, I mean, I wouldn't be surprised to see us test the 50-day moving average on the daily. That's going to bring us up to the 39.26 level. Just you leave that open mind. I'm not guaranteeing that's going to happen just because, like I said, there's a lot going on right now. With just the economy and the elections coming up, that nobody's really too doesn't feel too safe as far as just buying recklessly, especially with the Fed with their hands tied. So this is the next breakout line. This would be the 37.40. If the bulls get above it, then that's when we can start looking at a move because it's a pretty clear move up to the 3900. So they need to get above this resistance to kind of trigger another little mini short squeeze. On the we were extremely oversold on the hourly chart here. Heading into it, we had the bullish divergences, and this was the pop on. So we're right at the this 50-day moving average on the hourly. If they get above, same, we have this gap that's right here. That's at 37.60. If they get above it, then we're heading up to the 38.55 level. But this is really the main line in the sand right now. And if we look at the 15-minute chart, you can see this support, this has been respected for some time. So I think that if we do come down and take out the 36.40 level, somewhere in that range, that we're going to be taking out these lows, and from there, the next stop is going to be down at the 3,500 and probably even down to the 3,400. I still believe we're going to be all the way down at these levels, 3,000, 2,800, when everything is said and done. But right now, with the bullish divergences, the risk of shorting down here was not good at all, and this is what happened with it. So the market hasn't really been following the buy signals on the technicals and stuff. So just keep that in mind. I mean, they typically work. They work best when they're lined up with the whole predictive analytics model with the time, sentiment, as well as technicals. And this one, we really only had the technicals and the sentiment that was pinned at extreme bearish levels. But the timepiece, it's I mean we already know when that is. Woody's put it in every one of the reports. Go back and look at it. It's not going to be it's not going to be an easy say rest of the year for the Bulls, even if we do get a bounce back up to these levels. I think eventually it'll just be sold off and we come screaming down. So let's see what plays out tomorrow. On the 15-minute chart, you can see we do have a little bit of a bearish divergence. So we're kind of in this level here where the Bulls need to get above the 36.98 and the Bears need to get priced below the 36.50. So whoever wins that battle is going to win the whole thing. And with that, I will talk to you guys in the morning.